Hello everyone, I'm Chris Jansen, CEO of Kantar, and I'm very excited to have you with us for today's programme to launch the Kantar BrandZ Most Valuable Global Brands 2024. The unsettled global economy continues to provide a challenging environment for all of us, with inflation and rising living costs pressurising millions of consumers and businesses around the world. And of course, within those businesses, the marketing community also continues to be impacted as budgets and ROI come under ever-increasing scrutiny. That said, it seems marketers are certainly rising to the challenge in a wide variety of creative ways, and we'll see evidence of this in this year's results. By drawing on the power and depth of BrandZ's vast database over the last quarter of a century, our work this year clearly shows that with the right level of investment and strategic focus, it remains absolutely possible to unlock growth and create value in any region, market or category. Today's programme is brimming with insights to help you unleash the tremendous power of brand to benefit your business. We'll be hearing from many of our Kantar experts, of course, but also from a variety of marketing leaders on how they're reaching new heights. Thank you to our guest speakers joining us today. Best of all, if you follow today's full programme, you'll be able to access not only one, not two, but three completely free and completely brilliant resources for you to apply immediately to support your brand's journey. The first of these is, of course, the Kantar BrandZ Most Valuable Global Brands 2024 report, which contains the full global top 100 rankings, as well as 13 separate rankings of the most valuable brands across a wide range of categories and sectors. All this alongside high quality depth of analysis, thought leadership, and case studies. I've read it from cover to cover, I honestly have, and it really is our best edition ever. The second is Kantar's Blueprint for Brand Growth, which launched last month and you may already be familiar with. We're particularly excited about this work, which for the very first time combines Kantar BrandZ's billions of attitudinal data points with our externally validated, meaningfully different and salient framework, with extensive behavioural data from Kantar World Panel into a single coherent narrative of how brands really grow. Most importantly, the blueprint outlines the main growth driver and 3 interconnected growth accelerators for marketeers to activate to maximize their brand's potential, whatever their starting point. All of this has been condensed into a beautifully curated, detailed yet visual guide for easy reference. As you'll see, we've structured much of today's program around the blueprint's guiding principles, and we'll bring these to life with real-world case studies of success from across a range of sectors and geographies. And last but not least, the third resource for you to access is Brand Snapshot, powered by BrandZ, which launched last year and allows you to access BrandZ data for free. Simply log on, choose a brand, and get immediate access to data summarizing your brand's current position against key competitors in a variety of areas. We've already had thousands of clients sign up and use it from all over the world. So don't miss your opportunity to start using BrandZ data to your advantage. So lots to look out for, but of course, the most important part of today's session is you. And we'd love to hear from you. Please do submit your questions, feedback, and thoughts throughout the session. Our experts are on hand to answer your questions throughout the program. Please reach out to myself or the team with any of the questions or challenges you're currently facing. We're committed to harnessing the full breadth of Kantar's global resources to support you on your journey. All that's left for me to say is thanks again for joining us today. And now let's celebrate the Kantar BrandZ Top 100 Most Valuable Global Brands 2024.
Hello everyone. As we've just seen, this year's Kantar BrandZ Global Top 100 is as fascinating and eclectic as ever. And I'm sure it's already sparking lots of questions on how some of these brands have achieved such success in the demanding times we continue to live in. We have lots of insights and examples to bring to life for you today. But before we do, let's remind ourselves of BrandZ's best-in-class valuation methodology. So, what is a brand valuation and why is BrandZ's valuation methodology unique and superior? Brand valuation combines two key perspectives to arrive at a dollar value for any brand. The perception of the market, which is typically more volatile, greatly impacted by macroeconomics, and generally sits outside the control of brand and marketing teams. And consumer perceptions, which are typically less volatile, less impacted by macroeconomics, and much more within the control of brand and marketing teams in terms of setting budgets, designing strategy, creating content, and more. BrandZ's unique methodology takes account of both market perceptions via what we call financial value, which determines the proportion of a parent company's dollar value that can be attributed to a particular brand, and crucially, consumer perceptions via what we call brand contribution, which draws on the full power of BrandZ's database of more than 4 million consumers to determine the proportion of dollar value that is contributed by the perceptions of consumers, or what we often call brand equity, that intangible asset that sits in our minds. Since we launched the inaugural Global Top 100 way back in 2006, we've tracked the progress of two portfolios. One of BrandZ's most valuable brands, and another of those brands establishing the strongest consumer connections. Here, we've compared both of those portfolios to the performance of the S&P 500 and the MSCI World Index over the same period. And by doing so, we see some interesting patterns emerge. Firstly, we can see that brands with strong consumer connections deliver much better returns for their shareholders. Secondly, that investing in building strong brands provides a high degree of resilience when times get tough. We saw it following the global financial crash of 2008, and again, more recently, over the course of the coronavirus pandemic. And thirdly, we see that these brands recover much more quickly in terms of their overall brand value. So overall then, we know that brands willing to commit the necessary marketing investment to establish deep consumer connections are better off for that investment in the long term. Last year, we saw a correction of some overreaching by public markets over the course of COVID-19. We can now see more clearly that from late 2022, all four indices began a consistent upward trajectory once more, and importantly, that BrandZ's strong brands portfolio and the 10 brands with the strongest brand equity of all continue to comfortably outperform both S&P and MSCI. In other words, strong brand equity clearly still leads to faster and higher returns for brand owners, and continuing to invest in high-quality marketing plays a critical role in achieving and securing consumer relationships. Now, in the last 12 months, we've also seen the proportion of a company's total value accounted for by the contribution of brand increase from 30% to 32%, illustrating the growing role that brands are playing in the success of marketing-savvy businesses. Next, we're going to deep dive into this year's valuations to uncover the most interesting stats, facts, and trends to help better understand the results and start to think about what we can learn and apply. I'm delighted to be joined now by Nikhil Banger, Kantar BrandZ's Global Head of Valuations. Nikhil, thank you so much for joining us today. And let me start by saying a huge thank you to you and the rest of your team for the amount of work you put in to produce this year's Global Top 100 and all the insights that go with it.
Thank you, Martin. Hi, everyone. It's great to be here with you today.
So let's start by looking at the overall performance of this year's Global Top 100. And I see that the overall change from year to year in terms of the total value of those brands has increased by a seemingly massive 20%. But that doesn't seem to tell the whole story, does it, Nikhil?
Not really, Martin. Let me unpack this 20% for you. So if you see the progress of ranking from 2006, we are seeing some very clear emerging patterns. Firstly, we continue to see the longer-term growth trend. And secondly, from 2006 till 2020, the rankings grew at an average growth rate of 9%. But this year's growth rate of 20% is more than double than that of what the rankings saw in the last many, many years. Just to contextualize in absolute dollar terms, this is already an overperformance of more than $1 trillion.
So what you're saying in terms of overperformance is that the literal dollar amounts those brands are contributing to their businesses is actually ahead of the curve that we've seen in previous years. And that links back to what I talked about earlier in terms of stock portfolio performance, right?
Absolutely. Strong brands are contributing more and more in terms of absolute returns every year, even in the current environment.
That's great. So now let's look at some more specific examples of success at a brand level. So I can see Apple is our number one again this year. What can you tell us about the reasons for Apple's success?
Well, the big news is Apple has earned the tag of world's first $1 trillion brand. The brand has very strong brand equity and consumer relationships, defined by crystal clear difference and design credentials, which supports a premium price. The launch of Apple Vision Pro earlier this year in US is already creating a lot of positive buzz, with many releases expected in various different markets later this year.
$1 trillion is an incredible achievement for a single brand. And what can you tell us about at a sector level? How does the ranking break down, and who would you say are the other standout performers?
Well, as you can see, Martin, the ranking is well represented by a variety of sectors. But there are 3 sectors particularly that are dominating the ranking because of their sheer size. Technology, both consumer tech and business tech, financial services, and retail. And within each of these categories, we see the individual dominance of our top 5 most valuable brands: Apple, Google, Microsoft, Amazon, and McDonald's.
And that visual really does show the dominance of those players. It's quite amazing. And if we look at the fastest riser this year in terms of brand value, who is that? And have we also welcomed any newcomers, either to the global top 100 itself, or perhaps any of the individual category rankings we include in the report?
Yes, indeed, Martin. This year's fastest riser is NVIDIA, which has grown by 178%. The brand has spent a lot of time and energy in the last many years improving its brand equity in its core market, which is US, which also acted as a catalyst for its financial growth. As far as newcomers are concerned, we're welcoming 5 newcomers into our top 100: ADP, ServiceNow, VMware, Lululemon, and Corona. And as far as category level newcomers are concerned, we're welcoming 6 newcomers into that: Pull&Bear, Mercado Pago, Modelo, Flipkart, Britannia, and Nido.
And it looks like we've got a real mix by market and sector here, right?
Absolutely. Well, the newcomers are represented from a variety of categories: business technology, apparel, alcohol, retail, food and beverages. And as far as geographies are concerned, they're coming from a variety of markets: US, Canada, Mexico, Spain, Argentina, India, and Switzerland. One thing is very clear, Martin, that the growth can actually come from any sector across any geography.
Yes, so that really does show that with the right brand strategy and investment, it's still possible to find growth in any sector, in any market. Nikhil, thanks for bringing the valuations so eloquently to life for us today, and best wishes to you and the team. I'm sure we'll talk again soon. What we're going to do next is zoom in on the most important piece of all, brand equity, and learn much more about how to establish, nurture, and maintain it for the long term, whatever the sector and target audience. Over the last decade, we've seen a 20% decline in the strength of brand equity of the typical brand. Put simply, it's becoming more challenging to build and maintain strong consumer relationships, which implies that more and more brands are being marketed effectively, and it's becoming harder to make those telling connections. So let's explore this challenge more fully. The next 4 sections of today's programme are structured around Kantar's all-new Blueprint for Brand Growth that Chris mentioned earlier. As a reminder, the Blueprint combines Kantar's vast attitudinal and behavioural datasets, identifying a main growth driver and 3 interconnected growth accelerators for marketers to call on to activate and maximize any brand's full potential. First up, let's hear more about the growth driver from Graham Staplehurst.
So this is Kantar's new blueprint for brand growth, and I'm here to explain how it can help you. The starting point and the fundamental driver of growth for brands is being meaningfully different to more people. There are three parts to that: being meaningful and meeting consumers' functional and emotional needs. They benefit from being perceived as different from others, and extending these mental associations to be as deep and wide as possible. If you've followed Kantar BrandZ before, you'll know that our brand equity model is the meaningful, different and salient framework. And you'll have seen analysis using the framework that has shown how being meaningful and different is a key driver of brand value growth. It's behind the 88% incremental share price growth of the Kantar BrandZ Strong Brands portfolio over the S&P 500, for example. It's no surprise that this framework is the fundamental driver in our blueprint for brand growth. The blueprint is not just some words on a page, though. Behind it is the evidence that both validates it and illustrates how it can help you and every brand marketer. And we've structured the metrics that matter into a series of diagnostic analysis tools, we call them starting grids, to measure success, plot progress, and identify the most valuable actions a marketer can take to grow their brand further. Here's the first of these starting grids, plotting the Kantar BrandZ key attitudinal metrics, how meaningful a brand is, and how different it is from competitors. The four boxes show whether a brand is higher or lower than average within its category on these two. And 2/3 of the most valuable global brands are highly meaningful and highly different. That's 130 brands out of the 195 covered in this year's rankings. To reach the top 100 or be a category leader is a great success for any brand, and the vast majority have grown to this scale by investing in the brand's equity. Being meaningful is about having the right perceptions to open your brand to consideration. It's about delivering on relevant category needs, whether that's a great taste, a reliable service, or the right range of products. It's also about understanding and meeting emotional needs, like security, inclusion, or excitement. It's about being connected to category entry points in the widest way. But that's not enough. The strongest brands also have a sense of difference. I talked about this last year, and in the blueprint we explain how being different isn't just about distinctiveness. It's about making sure your brand perceptions set you apart from the competition. Since we're talking about driving growth, we've looked at the brand value growth of our most valuable brands in 2024. Now, while this grid looks the same, it's actually separating out these brands by whether they increased on meaningful or not, and whether they increased on different or not in the latest studies we conducted. Growing meaningful difference this year is clearly linked to growing brand value. The brands that achieved both had an average 19% brand value increase. Those that failed to do either fell back an average of -3%. As Nikhil showed us earlier, growth can come from anywhere, and both bigger and smaller brands managed to grow their meaningful difference this year. So it's not just about budgets, it's about good strategic planning, executing effectively, and reaching more people, as my colleague Jane will explain shortly. Before then, let's look at a couple of real-world examples. My first example you might not think of as a great brand, NVIDIA. Really? Yes, not only has Nvidia grown 178% in brand value as investors recognize the potential of the company's branded products, our analysis shows that B2B decision makers in the technology space now view it as both meaningful and different, with significant growth on both axes. Over the past 3 years, its disruptive leadership of the semiconductor industry has grown its difference, and its strategic focus on AI, higher performance computing, gaming and creative design has enhanced its meaning, widening the number of technology needs it meets. Now, let's pivot to a very different category, luxury. French luxury fashion and accessories brand Hermès has grown its brand value ahead of the category this year, up 23%. It's also strengthened consumer relationships that support high price points. Hermès regularly increases its prices. In early 2024, shoppers saw leather goods and shoes increase by 10 to 15% on many lines. Many bags are now over the $10,000 mark. But those sky-high prices don't reduce company revenues. In fact, they grew 18% to over $14 billion in 2023. Hermès justifies such extraordinarily high price points through its perceived difference compared to other luxury brands. And it's improved on this in the key US and Chinese markets by communicating its craftsmanship and quality, by limiting production of hero products to create exclusivity, and by providing a superior store experience with expert sales associates. So, that's the foundation of the blueprint for brand growth. Every brand needs a clear strategy to be meaningful and different to as many people as possible to drive growth, whether that's growth in penetration, in market share, in profit, or in brand value. I'll hand over to my colleague Jane Osler to talk about the first growth accelerator, but before then, let's hear more on how the world's leading marketers ensure their brands are meaningful and different.
Firstly, I think we have to be very humble as marketeers. Memory structures, distinctiveness, brand meaning is built over generations. It's very hard to do very fast. And so as marketeers, we stand on the shoulders of the giants that went before us. And joining Pepsi, I'm very humble to the generations of incredible marketeers who have built these brilliant brands. And one of the things that the greatest brands in the world do is they drive consistent meaning, they drive consistent distinctivity, because that's the way we shortcut into the memory structure and the fabric of culture, right? And so Pepsi's a great example. The new, someone said to me the other day, why did you do a new logo on Pepsi? What was behind that? It's not a new logo. It's a visual ID that deeply draws from the past, from where Pepsi comes from what Pepsi stands for, from the shortcuts in people's memories that distinguish and make Pepsi recognizable. But it also imbues new meaning. So, for example, the Pepsi Visual ID relaunch that went around the world, the pulse, the logo, the energy that comes from that, it makes you feel something. It moves you. It makes you feel energized. It's incredibly exciting. And, that visceral response, that emotional response is triggering new memory structures that pull from the past, but distinctly propel us into the future. So that's super exciting. But it also is ambitious in terms of strategic meaning. So I talked about our zero products before, which are fantastic taste and zero sugar. When we launched the new Visual ID, the Fast Company issued a fantastic quote. They said, it's a subliminal war on sugar. I thought that was very interesting. And they've read into the strategy. Actually, part of our branded strategy is to create one brand, not distinct SKUs and hero SKUs that all need to be advertised. And that's going to help us. If you look at the colors, if you look at how we're using black and blue, it's all about propelling us into the future where zero is becoming a much bigger part of our portfolio. The consumer is increasingly choosing that part of our brand, and we want to hero that in our communications and in our physical availability moving forward.
So I think for every company that is willing to grow organically, the brands are the most important assets of that given organization. So our philosophy, it's all about being brand-led and consumer-centric. This is what will guarantee our future. As we become more and more consumer-centric, we'll be better on understanding gaps and opportunities that we need to address to be really meaningful to the people we serve, because this is a human business and we always put people first. I think that the superpower of Corona is exactly the fact that the brand lends both the functional and the emotional sides in a very smooth and integrated way. And the second point is that Corona acts with a lot of consistency over the years. So let's talk a little bit about those two elements. So first, on the functional and the emotional levels. Corona, emotionally speaking, stands for what we say here is Corona inspires people to disconnect from stress, from routine, to reconnect with their true selves. And that usually happens when you are outdoors, when you are outside. So Corona says that outside is our best side. This is why everything that Corona does, it's all about that moment of have a break from the routine, go outside, stay close to nature, and reconnect with nature, reconnect with your true nature, be yourself again, relax and enjoy. That's very powerful for any brand, and Corona does it very well. Now, the tough part is to make sure that it connects well with the functional side too. And because it's all about Corona is all about nature, Corona is made with 100% natural ingredients. And because Corona is all about inviting people to be outside, Corona takes care of the outside. So we have a lot of programs in terms of plastic-free products, protecting the beaches, removing plastic from the oceans, and from there we go. But it's not because Corona wants to be on the headlines. It's because it connects with the central reason for Corona to exist. So there's a reason for Corona to do that. So as we connect the emotional side and the functional side in a very smooth, authentic, and genuine way, this gives a lot of power for Corona as a brand, and consumers recognize it anywhere in the world.
The idea of articulating a promise has to be then driven by that promise being delivered with every shift in the industry. And let me give you an example. When there was this massive digital acceleration, massive adoption of cloud, Infosys was the first tech services brand in the industry to launch Infosys Cobalt, which is a portfolio of our cloud services to actually eliminate the chaos around cloud with a very clear point of view as to how Cobalt is going to enable that transition for them. The same thing is true for AI. Well before AI actually became the buzz that it did, we were again one of the first in the industry to launch Infosys Topaz, which is again a solution that helps clients navigate their journey across a portfolio of products, platforms, and services. So the idea simply is articulating a promise is one thing. How can organizations continue to stay relevant to their clients by looking around corners and proactively investing in innovations, testing them at scale, and actually bringing it out to the market with confidence? And we believe one of the reasons why Infosys brand has stood the test of time is because of our foundational commitment to promise, but more importantly, our foundational commitment to staying relevant to our clients' requirements.
The blueprint for brand growth identifies 3 interconnected growth accelerators. If your brand strategy is paying off and you're developing a meaningfully different brand, then you will want to predispose more people to choose and to pay for the brand. The ingredients for predisposition are being meaningful, different, and salient. The Kantar BrandZ top 100 most valuable global brands certainly have all three qualities. Compared to the average brand as a group, they over-index very significantly. 20 points over on being meaningful, 19 points over on being different, and 34 points on being salient. Those are very large advantages, driving their scale and their appeal. And although Martin mentioned earlier that preserving these qualities remains a challenge, as marketers continue to up their game and utilise professional tools to predict and measure effectiveness and ROI, aiming to develop on all three dimensions remains vital. Predisposition has two sides. The first is predisposing people to choose or buy your brand, giving it a mental edge over competing choices when a purchase decision has to be made. The global top 100 brands have an average demand power of 169. This is our metric for predisposing choice. And that means these brands have on average at least 70% volume market share advantage if they can activate it. But that's the next growth accelerator, so let's not get ahead of ourselves. Predisposing more people means adding salience to the meaningful difference of your brand. It's whether the brand comes to mind quickly and easily at the decision point. The speed with which the mental associations you've built in the minds of consumers connect with the brand's cues in the real world. Doing this consistently creates demand. But as Graham identified with Hermès, pricing power is also important if you want to grow your business results. Being meaningful and different are the two key drivers that justify a higher price point for a brand in the minds of consumers. We compare a brand's pricing power with the price it charges, and 57% of the global top 100 have that extra pricing power that ensures margins are delivered and consumers willingly pay that little bit more. Kantar BrandZ evidence is very strong, linking higher demand power to greater brand value across this year's most valuable brands. Predisposition is a growth accelerator for demand, and through pricing, this translates into better business results. We have demonstrated this in a variety of ways in recent years, including our ongoing collaboration with the Side Business School at the University of Oxford. Professor Andrew Stephen has said that our brand equity data is the missing link to predict abnormal stock market returns. Kantar BrandZ is one way that you can persuade your CFO that brand building, far from being a woolly activity with unproven worth, is in fact at the heart of the most important financial performance metrics. Like Graham, I've got some more data-based evidence from the world's most valuable global brands, and I'll be using some more of our starting grid tools to show you why they're reaping the rewards of predisposition. Corona, the leading beer brand in Mexico, has become a global phenomenon. Entering the global top 100 for the first time this year with a value of over $19 billion, Corona has developed demand among beer drinkers the world over through consistent promotion of its key differences. Summer in a bottle, uniquely fresh with a slice of lime, evoking holidays at the beach and endless relaxing days. Our starting grid shows how it's building predisposition across three markets. In Mexico, where it dominates, it's still improving its meaningful difference with sustainability messages and its connection with nature. And in China, we can see 5 years of steady growth on both dimensions. Financial performance isn't just a matter of increasing share. A brand needs to do this profitably. So how can we understand if our brand has the right price? Kantar's pricing power metric is compared with the price of the brand in this next grid. While your price might be above, below, or around the category average, what's important is whether your pricing power meets or even beats consumer expectations. Brands falling in the top row of the grid are all justifying the margin the brand owner has set and may even accept a price rise when needed. That's 57% of the world's most valuable brands, and it's driving corporate performance and investor confidence. Beyond the top 100, we investigated how consumers are responding to the inflationary pressures in the economy and whether their choice of brands was changing. We asked consumers to identify if recent inflation meant they were still comfortably able to afford products in each category or if it had left them struggling. We looked at low, average and high-priced brands and their claimed penetration in this struggling group. Of the 751 high-priced brands, some were still being bought more often than others. In fact, high-priced brands with extra pricing power maintained 13% penetration, while the others averaged just under 5%. That's a threefold advantage, even when times are difficult and consumers have less to spend. They will still choose to pay a bit more if they feel it's worth it. And that leads me to my second example, Samsung. Despite inflation, Samsung has managed to grow its brand value 24% this year to over $40 billion. Operating in many areas of consumer electronics, but especially the profitable smartphone sector, where it has around 20% global market share and $18 billion in revenue. Samsung helped develop this sector, and it has built very strong brand equity to support its premium pricing. In our pricing power grid, Samsung justifies that premium in almost every developed economy. Samsung's range of great models that fit into everyday life, supported by Google's Android software, ensure that it can comfortably trade between Apple's super premium and a host of cheaper manufacturers. And to continue with our theme, let's hear more from our guest speakers.
I think it all ultimately comes down to what's your North Star? And I think a North Star for any brand doesn't necessarily have to be what it offers, but it has to be what the customer needs. And your communication has to actually stay relevant to the shifting needs of our customers. Let me actually give you an example. Something that I believe Gen AI has recently enabled and empowered marketers in very unique ways. Now, you know our commitment to the larger sport of tennis globally, how Infosys is very strongly partnering with the global tennis ecosystem, and tennis fans are one of the consumers that we serve along with our clients, which is the tennis stakeholders. Earlier this year, Rafa, who's one of our brand ambassadors, was actually supposed to make his return back to the Australian Open, and there was massive excitement around it because it was supposed to be his return after a significant injury. And just a few weeks before the Open, he had another injury and he actually had to pull out. We realized that caused a massive disappointment in millions of people. I mean, the tennis has 1 billion spectators around the world, and Rafa is one of the icons of the sport that people were waiting to welcome back and actually celebrate his return to a Grand Slam. Since that was not possible, we actually used the power of Gen AI and actually empowered each and every tennis fan around the world to be able to create their own little artwork celebrating Rafa in with the fans' own imagination as the backdrop. The idea was very simple, but the intent here is brands have to use platforms and create content that empowers the end consumer, that empowers the customer in the way they can express themselves. Something that today technology makes it possible. But then again, after all, the idea simply is to strengthen that connect between the brand and the consumer.
It depends on what we are trying to communicate on a specific brand, right? That's where it starts from. I'll give you an example in Lenor, which is one of our fabric enhancers brand in UK. And one of the challenges that we were having on that brand was that it was growing, but not as much as we would want it to. P&Gers in UK went to the consumers' homes to really kind of figure out as to what is happening from that standpoint. And what they discovered was that the gold standard for freshness in UK is the ability to dry your clothes outdoors on a nice sunny day. And that was their gold standard. The problem with that is, as you well know, Martin, that doesn't happen very often. So that's what what they were struggling for. So it led us to really kind of going back to the drawing board, designing the chemistry, the products that work in that context, and then really bringing it alive in our communication and in all forms of our content, whether it's from a packaging standpoint, so it comes alive on packaging, whether it's, I don't know if you've seen the copy, but whether it's from a copy and advertising standpoint, which really brings alive, we call it outdoorables, but it really brings alive the ability of Lenore that even when you're not able to dry outside, that outdoor freshness to your clothes. And that's really what the entire content strategy is around. So it really, again, kind of gets back to what the brand stands for, what consumer problem we are trying to solve, and the consumer insights in some ways becomes the red thread through which we think about the product, the package, the communication, the retail execution, and finally making it worth it for our consumers.
Media works at every point of the purchase decision journey. It's important to recognize every touchpoint that marketers can use and leverage them to the best effect. While BrandZ data doesn't explicitly measure media effectiveness, we can use it implicitly to observe which brands are doing the best job both before purchase, building predisposition as Jane has described, and at the point of brand choice. Because as our blueprint for brand growth acknowledges, brands not only have to create demand, they need to actively convert that demand into consumers buying or choosing the brand. To do this, the best brands are more present. Our blueprint starting grid for being more present compares these two sides of this critical juncture. First, we have the demand the brand has created in the minds of consumers, measured in BrandZ as demand power. It's derived from being meaningful, different, and salient. That's the input as a consumer chooses a brand. Against that, we compare it with the volume market share, the result or output of all those individual consumer choices. And here we have all of the global most valuable brands. And we can see the broad relationship between input and output, as our measure of predisposition strongly predicts sales for the majority of brands. We can also see that some brands achieve a higher market share than we would expect for their demand power, while others fall below expectation. Some of this is normal sample variance, but there are also important insights for marketers too. Brands that are more present at the point of choice can convert demand to and even steal consumers from other brands that they might have been predisposed towards, and thus drive brand growth. Being more present implies a lot of different actions. It's about having the product in the distribution channel, whether that's an e-commerce website, a high street or mall, a shelf in the right stores, or in emerging buying points like social media. It's about standing out and having the right packaging, facings, presentation, and position. It's about reminding consumers of the things they know and like the brand for. It's about making the brand easy to choose, reducing the friction of purchase through pricing or using models like subscription. The BrandZ data also shows us the benefit of being more present to aid brand growth in another way. Here, I've split the most valuable brands into those that have grown brand value and those that have remained flat or declined. The brands that showed growth in 2024 were helped in part by better conversion from demand to market share. Those brands were more present. For the average brand in this group, the benefit is around 2% extra market share. And with the scale that these brands have, that's a pretty massive advantage worth millions in revenue. Our analysis further shows the longer-term benefits to brand growth of being more present. The brands that are best at converting consumers at the point of decision are worth on average 31% more than the weakest. That's the cumulative effect over time of having an effective presence across more demand moments to capture more choices, combined with the strength of the brand's attractiveness, its equity, which means that fewer potential buyers are lost to or stolen by competitors. Just in 1 year alone, the brands that were less reliant on activation, that is, stealing consumers at the point of purchase, achieved 5% higher brand value growth than expected for their category. Those that were more reliant underperformed by 2% on brand value growth. To illustrate this, I've got two brands with quite different propositions. Netflix has had an incredible year with over 50% brand value growth. It has built this momentum with a potent combination of great content, smart media, and profit management by introducing charges for password sharing on an account. It has very strong equity, but it is also converting and retaining subscribers better than competitors, as we can see in this sample of streaming service data from the USA. It recruited more new subscribers than ever in Q4 of 2023, more than 13 million globally. That's its largest ever single quarter gain. And it brings total subscriptions to 260 million worldwide, leading all other streaming services. Despite the increased competition from free and paid content platforms, Netflix continues to win. Here's another story of growth. Uniqlo, one of the best performing apparel brands in 2024, up 25% to over $15 billion. This result is even more surprising given its high exposure to the Chinese market, which is suffering greater economic pressures. Uniqlo's popular range of good quality basics at affordable prices has gone from strength to strength in China. It has focused on an expansion strategy with plans to open another 80 stores across China this year. And that strategy has seen it move from a low demand and lower conversion to market share in 2014 to a high position on both by 2023. It makes itself as accessible as possible, combining its physical store presence with optimized e-commerce and social presence. And while this example is from China, the brand is executing a global expansion strategy to ensure it captures all the sales it deserves. So, there is the third critical component of the blueprint for brand growth, being more present. I'll hand you over to Ellie Thorpe to discuss the final growth driver, but before then, let's hear a little more about being more present for consumers.
Then we were looking for a way to really help us accelerate the meaning and the difference that we can bring with Corona Zero to consumers. And this is what led us to have a conversation with the International Olympic Committee prior to the Paris Games. And it was a great match. We presented our credentials and how we believe that the Olympic Games can be great, because given that the games during the Olympic Games, they happen throughout the day, this is the perfect opportunity for us to showcase how non-alc beer can unlock new consumption occasions, right? Consumers declare that beer is their beverage of choice while they're watching sports. So now with Corona Zero, they can watch the Olympic Games throughout the day in more occasions because it's non-alcoholic. So it's the perfect match. It makes a lot of sense for consumers to be able to enjoy their beer in much more occasions. It makes a lot of sense for the brand, because it's all about fulfilling its promise of helping people to disconnect, to reconnect with their best selves. And it makes a lot of sense for the Olympics, so you can have consumers and fans more engaged and with a greater level of celebration of the Olympic Games as the biggest event on earth.
The core strategy that our brands follow is to be available both from a mental availability standpoint, which happens through communication, it happens through media, as well as physical availability, which is where distribution comes in. And it is critical for our brands to be available wherever consumers are going to be shopping them. whether that is in an offline context or whether that's in an online context. And again, what we are trying to do is make sure that when consumers is making that shopping choice, that we are providing them as the best shopping experience, which lets them select the best, not just the best brand, but the best version of that brand that meets their needs, and do it in as quickly and as simply as possible. But that distribution and the quality of that distribution is very fundamental to our brand strategies.
作为中国最早走出去的企业之一，海尔呢始终坚持自主创牌。我们目标是打造中国人自己的世界名牌。应该说呢，经过40年的创新发展，如今海尔呢已经连续6年，以唯一的物联网生态品牌入选BrandZ最具价值的全球品牌100强，也连续15年呢蝉联了全球大型家用电器品牌零售量第1。这其中体会呢，可以概括为呢3个一，也就是呢一个底线，一个信念，一个体系。首先呢看一个底线，要充分的尊重本土文化和法律，这是基础，也是底线。第二呢是一个信念，要始终坚持自主创牌。海尔呢在创业之初就坚持全球创牌战略，并带动了中国家电业实现了从中国产品到中国品牌的转变。目前海尔已经在美国、英国、日本、意大利、新西兰、泰国、印度等国家和地区成为了最受欢迎的前5大品牌之一。
Hi, I'm Ellie Thorpe, Global Research Director at Kantar BrandZ. It's been fantastic to see so many brands celebrating success this year, with 36 brands in the top 100 reaching their highest ever value. It's not just big tech brands who are seeing brand value growth. As we heard from Graham, brands big and small, far and wide have improved the contributions they're making to business value. To understand more about how to drive growth, take a look at this starting grid. We've got all the brands that have grown this year, and you can see both their penetration and their brand equity momentum. We call it future power, and it's measuring a brand's potential to grow in the future. The size of each bubble represents how much it grew. It's clear that growth is possible from anywhere. But the same is true of decline. These dark bubbles represent those brands seeing a decline in value this year. There is no obvious pattern here. It's possible for any brand to grow or decline, and as recent years have shown, some of this is in the hands of unpredictable market conditions. No brand has the guarantee of growth, but there is plenty of opportunity. And the most valuable brands in the world do not leave growth to chance. This brings us to Blueprint's final growth accelerator: find new space. Once brands have predisposed enough people in their existing category and have gained substantial market share, it may be time for them to look beyond existing category parameters and find new space. Now, that might be expanding into new markets, into adjacent categories, or innovating products and services in more radical ways. Think Apple's extension into audio products, or Uber into food delivery. If we look at big brands, so those brands that appeared on the right side of our bubble chart, big brands with brand equity momentum are far more likely to grow. We can see on average they grew 8.1%, compared to the brands with lower momentum, which only grew 0.5%. These faster growing brands are leveraging their momentum to take them to new places. And we don't see this pattern for smaller brands, as they still have room to find growth within their category. With big competitors around, these brands risk overextending themselves if they move too soon. Let's take a look at some examples of brands actively finding new space and ways to grow. BYD is a Chinese automotive brand specializing in electric technology. It's been shaking up its sector in recent years, and in Q4 of 2023, its sales surpassed Tesla's for the first time. Despite challenging economic conditions in China, BYD has retained all of its value while many other Chinese brands have declined. BYD is well known for its disruptive leadership in the EV space. It's grown its presence in its home market significantly, and it now has strong penetration and brand equity momentum, placing it in a great position to find new space. It's already making strides here by expanding its manufacturing hubs around the world in markets like Brazil and Thailand, with a clear ambition to strengthen its global presence. BYD also leads the way when it comes to research, staying at the forefront of EV development and partnering with other global automotive players to realise these goals. But it's not just newer brands that are able to find new space and ways to grow. It's just as important for older, well-established brands to continue to innovate and push boundaries beyond their existing contexts. Gillette is a great example of this. With almost 100 years of history over BYD, Gillette continues to find new ways to grow in a challenging category with changing consumer behaviour and increased competition. Gillette sees 11% brand value growth this year, outperforming the personal care category by some way. And the foundation of Gillette's success is the strong predisposition it has thanks to years of consistent communications that have built its reputation for superior quality. A leader in terms of both market share and brand equity, Gillette continues to find the right opportunities to extend into new categories and meet changing consumer needs. For example, recent innovation into intimate grooming and exfoliating skincare. This continued innovation is helping to shape personal care trends. The success of these brands indicates that no matter your sector or your market presence, there are always opportunities. Finding new space is the final part of Kantar's blueprint for brand growth. It's there to help you understand your brand's current position and plan for its future growth. With the right data and the right framework, your marketing can be more effective and your investment in brand building more rewarding than ever.
It's about projecting the future of demand, the future of your category. And I think this is where we have something at PepsiCo called the Change Compass. And I really love it because it takes a mixture of macro forces, social listening that uses many data sources from Sprinkler to Black Swan to basically create foresight that starts to help us have a crystal ball. And I always say there's only one thing you can guarantee when you predict the future, and that's you're going to be wrong. So don't predict too firm a future. What we do is we scenario plan. We actually look at the macro forces, look at the foresight, and when we're at our best, what we do is we literally push the corner of the envelope, really understand, well, different possible futures that this could create. And I think the power of that exercise is if you use really diverse thinkers, people with diverse backgrounds, diverse skills, diverse cultural paradigms, actually, you really get to push the boundaries of what the future could create. And then as a category leader, a category shaper, you start to say, okay, so in that scenario, how could our business flourish? How could we delight the consumer? How could we shape the future of our category to even meet unmet needs that are here today? And I think that's the mark of leading brands that really lead and shape their categories. They don't just hold the mirror up to the current reality and be reactive. So that's a really exciting part of defining the demand growth of the future.
2019年呢，海尔正式进入了生态品牌战略阶段。经过5年的创新探索，目前呢正在向生态型企业转型。今年年初，我们发布了新的品牌口号，以无界生态共创无限可能，希望能够创建更加开放的生态体系，通过与用户、生态方的持续交互，实现共创共赢，创造更大的社会价值。具体来说呢，这一口号包含了3个要素：第一，无界生态 寓意着呢，海尔要构建身份无界、知识无界、地域无界的开放生态，打破价值创造和价值分享的界限，重塑人与人、人与物、物与物、人与组织、组织与组织的价值关系。第二呢，共创。共创呢，代表着海尔一以贯之的人的价值最大化的宗旨，激发每个个体的创新活力，让消费者真正的变成产销者，全流程参与体验，让生态伙伴呢在海尔生态中共创价值、共享价值。第三个是无限可能，表达的是当更多的界限被打破，更多的个体和组织的创造力被激发，新的价值也将不断的涌现和持续的裂变，共创美好生活的无限可能。
Thanks, Ellie, and thanks to all of our speakers today. As promised, we do still have one more free resource for you to access right now to help your brand grow, which I'll talk more about shortly. Firstly, though, a final reminder of the questions you should be asking to maximize your brand's growth potential. How can your brand be meaningfully different to more people? Predispose more people to buy and to buy at the right price? Be more present? And find new space. The final free resource for you to access immediately is Brand Snapshot powered by BrandZ, which launched last year and allows you to access BrandZ data for free. Simply log on, choose a brand, and get immediate access to data summarizing your brand's current position against key competitors in a variety of areas, all signposted to make insights easily available. Join the thousands of businesses from all over the world who are already enjoying completely free access. Just follow the QR code to register and add it to your bookmarks. We do hope you found today's session useful and inspiring. We'd love to hear from you, so please do share your feedback and questions via the live chat. Thanks again for joining us, and on behalf of Kantar and the entire BrandZ team, see you next year.